A very good morning. Welcome to Chartbusters. Well, this is a show where we'll highlight all the buzzing stocks of the day. We'll also get you expert advice on how you can trade on the Nifty. All that and more in the next half hour. I'm Nigel D'Souza, and with me is Mangla Malu. Hey, Mangla, we're holding mildly in the green. The Nifty bank is up close to around 150 points. So things are looking quite good. I was looking at a few of these chemical stocks, and they're doing quite well. We had a bit of a rally. H acid prices, they moved higher. And vinyl sulfone prices as well have moved higher. So that's why stocks like Kiri Industries have moved higher. Bodal Chemicals as well is moving higher. Keep an eye out on that. There are reports that suggest there are some shutdowns in China. And that's what's helping these companies increase prices by nearly around 10 to around 12%. So that's why, in fact, we are seeing that these prices moving through the roof. And there are a lot of mid-cap stocks as well that are doing pretty well. Select mid-cap stocks, Mangla.
Absolutely. You said the word select mid-cap stocks because the index, while it is outperforming the frontline indices, the Nifty bank is outperforming select mid-caps. We just saw a recovery from the lows for the mid-cap index, and that can be attributed to Sun TV. That one's moved to the high point of the day. There is a valuation gap between Sun TV and Z, and with near 6-year high ad revenue growth, Sun TV makes for a case of the up move that is taking place right now. If you take a look at the other stocks, Parag Milk, remember it had an analyst meet on Friday, so that stock after results is now up close to around 4%, so we'll keep an eye out on that one too. But first up, all the top stories that we're tracking at this point in time. There is some respite for oil marketing companies as fuel prices have been hiked for the first time since 24th of April. Petrol prices have been hiked by 17 paise, diesel by 23 paise per litre, and all those stocks are outperforming.
And it's a relief rally for pharma stocks across the board as the drug companies dodge a bullet from US President Donald Trump as the policy has failed to announce any direct government intervention in the price negotiation.
Despite dismal earnings, Canara Bank bounces from the lows. Management tells CNBC TV18 they expect gross and net NPAs to decline significantly going ahead. They also say the credit cost may be sub 1.25% as against 3.9% that this was in FY18, as well as they expect a loan growth of 10 to 12%, retail accounting for 20 to 22% of that growth in terms of loans.
And Sun TV is over the moon today. The stock is higher in trade, posts a stellar Q4 numbers with ad revenue growth hitting a 6-year high. Brokerages are upbeat on the stock, with most of them raising their target prices.
Tata Global Beverages down almost 10% after reporting a 22% cut in the company's EBITDA for the fourth quarter earnings. Indian brokerage Kotak believes that directional positives for the company are priced in, downgrades the stock to reduce rating with a target price of 285.
Okay, how do you trade the Nifty? We're sitting with a gain of more than 20 points. The Nifty bank is up 150 points. Bear in mind that last week, we had the Nifty that hit a double century. 190, 195 points is what we put on. But how do you trade the Nifty? From here, Ashwini Gujral is with us to help us out. Hey, Ashwini, good morning. Monday morning. What's the trade on the Nifty?
I don't think there's much of a trade on the Nifty because we're heading into some sort of an event. So today it's likely to remain choppy, maybe up in the morning, down in the evening types. But overall, the market still has a positive tone, and there are specific sectors and stocks which are doing well. So one of them is the agri space. So for the moment, GSFC can be bought with a stop about 130, target of 145. Amar Raja is a buy with a stop of 870, target of 895. That battery move seems to be resuming. And United Spirits looks like it's holding on to Friday's low, and at some point there should be upside here. So that is a buy with a stop of 3200, target of 3340.
Right, Ashwini, thanks a lot for that. Ironic that one has spirits on Monday and doesn't have coffee because Tata Global is at the low point while United Spirits is moving towards the high point. But let's move on. We have Vanita Organics reported a steady set of numbers in the fourth quarter. Higher employee costs actually impacting the margins. Other income doubling year on year has aided the bottom line. The stock up about 2%. We have Vinati Saraf Mutreja, the executive director of the company, joining in. Thanks a lot, ma'am, for joining in. First up, revenue growth of close to around 9% in the fourth quarter. If you could tell us a couple of details, what was the volume growth, what was the price growth, and margins, they came off. Was this because of higher crude prices or the employee expenses which have moved higher?
See, the first 9 months of this year, we had low offtake of both IBB and ATBS. But what has happened in Q4 is our biggest competitor for ATBS has exited the industry. Also because of crude prices going up, the demand for ATBS has increased exponentially. So in Q4, actually, if you see, we did 50 crores of PAT, and we expect to maintain that same run rate. As far as margin squeezing goes, when our because of crude prices increasing, our raw material prices have increased, and as a result of that, EBITDA margins have come down.
Right, Vinati, so you were telling us that in the initial part of the year you had a bit of a problem in terms of offtake, but for the year you had guided for around 15%. You've delivered around 11%. For this year, what kind of a number can we look at?
Actually, for FY19, we are expecting about 25 to 30% growth in revenue, mainly due to increase in ATBS demand.
Okay.
To service that, we are even debottlenecking our capacity from 26,000 to 30,000.
Okay, all right. So that's going to be driving the top line growth. Vinati, a quick question. You have three segments, IBB, IB and ATBS. What is your market share as of last count in all these three segments?
See, IBB, we do about 60-65% global volumes. ATBS also, as of today, our market share would be around 60%.
Okay.
IB, we sell mostly domestically because it's a gas, cannot be imported, cannot be exported. So yeah, about 80% domestic demand we cater to.
All right. So if you could also give us some color on your butyl phenol project, when is it likely to come on stream, as well as what kind of revenue and margin potential does that have? What kind of ROEs would you enjoy on these new plants that the new capex that you're indulging in?
So the butyl phenol project, butyl phenols are derivatives of isobutylene. It should be ready by April 2019. Should add revenues of about 350 crores. Now, minimum ROI expected is about 20% from this project.
You've put in about 180 crores or earmarked 180 crores for this, right?
Actually, the investment will be about 240 crores.
240 crores. So that's about 48 crores in terms of ROI, what you're looking at, 20% if we go by the numbers that you're talking about.
Yes, yes.
All right, Vinati, if you could help us out with how's your balance sheet looking? You're talking about some expansion plans. What's going on there? If you could give us a broad summary. What is the cash in your books? What's the debt?
I think debt as of now is nil. Cash on hand is over 100 crores.
Okay.
We are generating above 250 crores in cash every year.
Okay.
Our investment for the next 3 years, combined butyl phenols and other projects should be about 200 to 250 crores.
Okay, all right. So, Vinati, all your expansion will be undertaken from internal accruals.
Year on year, I'm talking, yeah.
Right? Okay. And your target for the next couple of years is?
Yes, that's right.
You've done around 750 crores, Vinati, in the past year. You're talking about around a 25 to 30% growth. And in the next couple of years, by FY21, you were telling us the last time, I think you're looking at around 1,500 crores. That's still on the cards?
That's absolutely still on the cards.
Brilliant.
All right. No change there? Upside change?
Well, I can tell you one revision is that our PAT for FY19, we are expecting a 35 to 40% growth.
Okay. All right, Mangalam, that's not fair. Vinati is giving us commentary. She's expecting to do 1,500 crores and you're asking for an upside risk.
So I track FMCG and there's an old Pepsi campaign which says Dil Mange more.
Right.
So that's what the street is expecting. Okay,
all right, Vinati, thanks so much for stopping by. Your employee cost went up, so your employees are happy.
Thanks,
your shareholders will be happy if you deliver these kind of numbers. All the best for the remainder of FY19. Well, on that note then, I think we'll slip into a short break. Up next, we'll get chatting with the management of HOEC. Stay with us.
Welcome back. Just keep an eye out on Sun TV. We've been speaking about it, but that one's now moved to the high point of the day with a gain of almost 12.5%, and individual mid-caps doing fairly well, though the index has slipped a little after recovering from the low. So we'll keep an eye out on that. But we have earnings all the way. Mr. P. Elango, the MD of HOEC, now joins us to give us his color on the sort of quarterly performance that the company posted, as well as his outlook for the next financial year. Before we go into your quarterly performance, Mr. Elango, this year you've done revenues of close to around 48-49 crores and margins of close to around 64%. I remember you giving us a guidance of 150 crores on the top line for FY19 with 75% margins. Now that implies 3x in terms of revenues as well as improvement in margins. Is that still on the cards for FY19?
Yes, indeed. First of all, the year FY18 has been a remarkable year where we had achieved three major milestones. Number one is bringing the Assam gas into the market. Number two is securing two very interesting discovered small field blocks, one of them enabling us to enter the prolific Bombay High field. And the thirdly, recent announcement on acquiring Geopetrol, which has got a 30% interest in a producing block in Karsang. With that in place, we are well positioned to deliver the number that I had mentioned to you, where during this financial year, we should definitely be delivering a 3 times growth on the net profit with a top line close to 150 crores. We are on track to achieve what we have guided at the market as we did in the last year.
All right, Mr. Lango, you're sounding fairly confident. You have done a big increase this year to around 49 crores and you're talking about 150 crores. Talking about net profit tripling as well. Your shareholders will be very happy. But let's get further details, sir. You were talking about that Assam unit. Earlier, I remember you were telling us you're expecting around 40 lakh rupees on a per day basis. What is that number now? What kind of revenues are you generating from the Assam unit?
Yeah, from end of this quarter, we would get into that 40 lakh per day numbers. Okay. We are right now doing a run rate of more than close to 32 lakhs per day. Okay. But we will increase the current production of roughly about 25 million cubic feet to 36 million cubic feet by end of this year. So our numbers on 40 lakh is very much intact. Further, as we planned, we have commenced the 2-well drilling campaign in PY1 offshore field. The campaign commenced in April. By end June, we expect to complete the 2-well campaign, and that should result in increase in production from that quarter onwards. So overall, on an average, for this financial year, we should be doing 40 lakh per day number, which is in excess of 40 lakh per day number, and that should get us to the 150 crore top line that we had committed.
Fair point there, Mr. Elango. Now, moving lower from Assam into the Kaveri Basin, we understand that you were ramping up some production out there. What is the existing production amount in the Kaveri Basin, and what do you plan to take it higher to?
Yeah, currently Kaveri Basin is producing about 2 million cubic feet of gas per day. With this 2-well drilling campaign, which is underway now, we should be able to ramp it up to about 10 million cubic feet of gas per day. Since we already have all the delivery infrastructure in terms of pipeline and a gas sales contract in place, along with the demand, the sales should start increasing from July onwards. In parallel, the Assam ramp-up is nearly complete. Right now we are out of 6 wells, we are already producing from 5 wells. The 6th well also will be hooked up and delivered to the market by end of this quarter. So primarily our this year would be from Kaveri Offshore, where we hold 100% participating interest, and our Assam Dirok project. Both should contribute to robust growth, both in terms of production volume as well as profit and revenue.
Mr. Lango, very quickly, more basic question. You're sounding so confident. Business is looking fabulous. You're talking about 3 times revenue growth from here. Once you get all this money, can your shareholders look forward to some kind of reward from the board? Will you be looking at, maybe a dividend? How do you intend to utilize that money? Very quickly, sir.
Now, if you look at the external environment, it is offering an excellent opportunity to upgrade your portfolio on a continuous basis. The government has opened up with an open acreage licensing policy.
Okay.
There are also inorganic opportunities that are available. The company's strategy will be to build a very strong portfolio where we are continue to increase our strength and presence in Northeast region. Today we are the largest private oil and gas producer in Northeast region. We would continue to focus on that region. We have got experience both in offshore and onshore. So I would rather would like the money to be reinvested in developing a much more stronger portfolio with a pipeline of projects. Obviously decisions such as will be taken by the board.
All right, Mr. Lango, thank you so much for joining in and giving us a strong outlook, a fairly strong outlook for the company's financial performance, and also sharing with us the fact that you are looking to reinvest further free cash into your business. With that, we'll slip into a short break, come back. Solar Industries, that's the management waiting by on the other side. We'll get chatting with Mr. Vinity Nilesh Panpalia.
Welcome back then. ITC is a stock that's holding the Nifty up as we speak, so just keep an eye out on that stock. But a lot of numbers coming in thick and fast over the weekend. We have Solar Industries. They reported a rather good set of earnings in the fourth quarter. To discuss what's the way ahead, we have Mr. Nilesh Panpalia, the CFO of the company, who joins us on the phone line. Hi, Mr. Panpalia. Thanks so much, sir, for joining in. Let's talk about the way ahead, sir. I believe your order book is currently at around 1,000 crores approximately. What kind of order inflow are you expecting for the coming year? And if you could break it up for us, how much are you expecting to come in from Coal India? And how much of that could come in from the defense orders? Because that's slowly growing. I think that's around 200 crores odd now.
Good morning.
Morning.
Definitely, we had a very good quarter, one of the highest recorded sales. Along with that, the year also went well and in line with our expectation and guidance. And as you mentioned that we have the total order book of around 1092 crores. And out of this, Coal India is roughly 782 crores. And we have Singareni Collieries and orders from defense, which is worth around 255 crores.
Right.
The new tender of SCCL expected to come out by the end of this May 2018, from which we are expecting further orders. And there will be more orders which will be
Mr. Panpalia,
and our overseas business.
Mr. Panpalia, we have some of those orders. We wanted to understand how much is the order inflow you're looking at. Can it be 400 crores?
Another 400
crores?
to 500 crores.
In this year, in this fiscal?
Right, this fiscal.
Okay, and how much of that will come in from defense and coal? Max will be from coal?
It is too early to comment, but maximum should be from defense.
From defense? Oh,
from defense,
that'll be interesting.
Oh, Mr. Panpalia, so we will...
I'll just highlight the reason being that we have recently participated in the RFPs which are floated by the government. And out of, for the 8 products, we have participated in 3. So we are hopeful that, orders should come in.
What was the size of those RSPs that you participated in?
What the government has stated that the order and the contract will be valid for 10 years.
Oh.
Total size is around 10,000 crores. So let us see in which category they have not specified.
Okay, so you will be hoping to get some portion of this.
Yes.
One more thing, sir, not just for your company, but for the industry in general, we have elections in the next year. Could you see suddenly some of these orders totally getting frozen up or dried up getting into election year, or you think it will make no difference? These orders will continue coming?
Yeah, so we don't feel this should make difference because anyway what we are catering is in the infrastructure segment and in the mining segment, which are key necessities of our country and economy. and as well as now the defense shift which has started is not only supported by this government, but the earlier government also has initiated this.
Fair point there, Mr. Panpalia. We'll take the defense point forward itself, given that is the growth area for the company. Your defense order book is 255 crore, which is roughly around 25% of your current order book, while the share of revenue from defense is sub 1% as we speak. So what is the executable duration of this order book that you have, and how is this share likely to go up going forward?
So this year, our target is roughly around 200 crores of revenue from defense. Now, at the beginning of this fiscal, we had mentioned that we will be achieving some 80 crores, but what we achieved was 37 crores. And this delay was because of the delay in the process of qualification of the process, product, supply chain, and field trials. So it really took a long time than expected to start the commercial production. But at this stage, we are happy to share that out of this defense order we have, the key qualification stages related to all these facilities, processes, and trial production is almost completed for products more than 175 crores. We are very hopeful of achieving this 200 crores.
Okay, all the best, Mr. Panpalia, for FY19. Well, on that note, we'll have to wrap up on Chartbusters. You stay with us. Trading Hour comes up next.